All right, hey there, everybody. Christopher Inks with Texas West Capital. It is just after 11 a.m. Central Standard Time here on Monday, the 27th of July, 2021. We are on the back half of the year here, guys and gals, and I hope you've been paying attention. There's a lot of craziness going on with the markets. You might say, oh, but that's what's happened over the last year. Not so much. I mean, yeah, we've had a good run up there just over a year now. But now that that's getting out and getting done, I think you're going to start seeing some changes going on here as this year completes. With a little bit of luck, Bitcoin will run up to six figures. I don't have a lot of really great hope for equities, though. Unfortunately, FX, man, if you're looking at things, I think the dollar is making a strong argument that the bottom was put in at the beginning of this year, that macro bottom. So we would see, the dollar running up there as everybody else starts dying off. You notice China's been selling off here. If you guys have been paying attention last few days, China stock's been dropping left and right. The market's in there. And so, when you're looking at that and their impact on the world as far as exports and imports and everything else goes, often we're going to see that effect kind of continue on throughout the rest of the markets. So it should be an interesting last we got 5 months left in this year: August, September, October, November, December. So hopefully you guys will keep showing up here and maybe even join us over there at howtotradetowin.com. Tell you what, speaking of that, let me go ahead and throw this on here, guys. As you know, we are getting down to the end here. This is this discount I've been having going for a while here is going to expire on the 1st of August, so that's less than a week now. You can use that discount code there, that 50% off Tier 3 code, to get 50% off the already reduced 6-month and annual Tier 3 membership subscriptions. The way I look at it, guys, I mean, again, I've told you, you can learn to trade on, with all this information out there. You can learn to trade without, getting in with anybody. The difference is it's going to take you a lot longer because you don't know what you don't know. Period. End of sentence, guys. It's like anything else in this world that you want to learn how to do. You do not know what you do not know. And with the internet out there, there's a lot of misinformation. There's a lot of half-truths and outright lies when it comes to trading. And you're going to have to suffer through those to figure out what they are, which also means a strong drawdown in your account. So, you're likely to trim a lot of wasted money and a lot of wasted time by joining us. We'd love to have you there. Jump on that, all right? Let me see here. Who else is here already? Crypto Mowgli, what's up, buddy? Good to see you checking back, man. Mark's here. Who else is? Chris Day, what's up, man? Haven't seen you in a while, buddy. I hope all's well across the pond over there. Let me see. Sparl Architect, Devlusian. Hank, what's up, man? Mike is here. Jared the Great. I love that name. Jared the Great. I'm great. Just ask me. I'll tell you. Did I say Monday? Whatever. It's Tuesday. Tuesday, the 27th of July. My bad. Yeah, When you don't work for anybody else, you kind of work 7 days a week. They all kind of run together, right? Let's see here. Data, slowly running out of quotes and wisdom jokes to find. You better get your gear on, man. Get it in gear. Go on. If you could do it for a few more months, then we could start just recirculating all the other stuff that you've already said. Let's see here. Higher Low Crypto, what's up? Oh, you like that Lacey Hunt video? Good job, man. Yeah. Dr. Hunt, smart guy. Excuse me, his video, he talks a lot about the same things that I've talked about over the last probably year or two now, and the things to watch out for and the things that we would expect to see, which have happened, as the economy does what it's doing right now. I get a lot of heck from people, because they expect the things, when I'm talking about macroeconomics and large term things to happen the minute I say them, right? And that's just naivety. That's just inexperience in the markets. These things that I'm talking about, these larger macro ideas, are going to take a little bit to play out. They're taking a little bit longer than what I thought, and that's fine. If you've been following me for any length of time, I don't really care about times how long something takes. I'm interested in levels, where structure, how things are playing out. I think if we're always trying to figure out how long it's going to take for something to do, that's usually the question I get. The newer the trader, the more often that question comes up. Well, how long is this going to happen? How long is it going to take for price to get here or to get there? And you're going to have people out there who are going to try and tell you what you want to hear there, so that way, they can get your money or whatever. It is what it is. But I would advise you, as traders, to not worry so much about time. Worry about getting in the structure. Start to learn and understand the structure of the market and how it plays out, how it moves, how price action, goes back and forth there. And that's going to set you up a lot better, because you're going to be able to get in more often than not closer to the bottom than you've ever been able to, in a nice comfortable position before things pop up. Ask our members how many times over the last year we put setups in there where they were at the bottom before anybody even talked about them. And they were in early and they had to wait a little bit. But man, once it took off, it was like nothing. Everybody else scrambling to get in once price takes off. Our guys are already in there, just waiting for it to go. And everybody else that's jumping in afterward is just popping that price higher and higher for them. And that's the way it is. But yeah, that Dr. Hunt video I thought was really well done. About 30 minutes long, but he does discuss a lot of those things. If you guys haven't heard me talking about him over the last couple of years, he kind of puts them succinctly together in there. Kind of gives you a little push to look further if you want. Samir, what's going on, man? Oh, yeah, I had a good weekend. It's always too short, right? I do all this over here, and then even on the weekends when I'm not technically working, I'm still working. So it is what it is. Hopefully we'll get this to a point where I won't be doing that all the time, get more rest, more relaxation. But for now, it is what it is. Let me see here. Mark says, also the top holders of the Asian stocks were European and Western investors. Just read about it this morning. Top 10 holders of Tencent are not Chinese. Yeah, it makes sense. It makes sense. But yeah, you should be watching, that Chinese market, those Asian markets, we might even take a look today at the USD against Chinese yuan there. I think we might take a look at also today total market cap, excluding Bitcoin there. So basically your alts. I think we've seen something interesting going on there. So we'll take a look at that with Bitcoin. It's moving up here. We'll look at Bitcoin. Maybe take a look at some other things going on there. So yeah, we'll check out some good stuff here. Crypto Mowgli, Lacey Hunt video. Let me think here. I think I posted it right here on Twitter. Let me see here. For anybody that's interested. Oh, let me see. Where did it go? Lacey Hunt. Here it is right here. It's this one, Crypto Mowgli. So if you come over to my Twitter profile there, you can get it there. As a matter of fact, you know what? Let me just do this for you guys that are here right now. Nope. Let me see here. Yeah, you know what? You can just click on my thing. You'll get it there. I'll put a direct link here. Let me put a direct link here, guys. And we'll put it right in there for you guys. Easy click. There you go. But anyway, yeah, it's a good video, good information in it. If you haven't been paying attention to some things. Like I said here, things take a bit of time to play out. Here's a great quote by Bill. It says, investing is a business where you can look very silly for a long period of time before you are proven right. Again, remember the market can stay, that other old adage that says the market can stay irrational longer than you can stay solvent, right? Longer than you can stay liquid. It is what it is, guys. So you want to be careful with that, especially when you talk about the larger macro ideas and what's going on with all that. Again, we talked about, I've talked about Chinese stocks here. Looks like on the 22nd or whatever, 207 billion worth of Chinese stocks and 126 billion on July 3rd. Unwinding going on. What else can we talk about here? Oh, hey, listen, real quick, guys, while I've got you here, don't forget, Elliott Wave International, they've got their free thing here. Let me see if I can get the the code. You know what? It's this page right here. I've got a short code here to get you in there real quick. And if you haven't done it, sign up for it. If you are signed up for it, go ahead and check it out, guys. You know, again, this is part of what I do is I try to give you access to really good information, even if it's not from me. And Elliott Wave does this multiple times throughout the year where they put out a lot of free stuff. And so this is good for 19 days, which is through August 6th. It's July 19th through August 6th. And you're getting, you can get access to 50 plus markets, analysis for 50 plus markets out there. So it's a great bit of, alpha, a great bit of info to get in there, guys, to check out. Especially, I know some of y'all are, from overseas. And so, they also do foreign markets. So you might want to check that out. A lot of good stuff there. But check it out. By the way, sometimes I get access to things that other people don't for you guys to follow. So always make sure you're following me. EWL, give me a special code or something I can give you all that'll get you access to free training, free education, free content, stuff like that. Like this is available. Pretty much anybody can do this. But there are some times when we can do it where it's just us. So be sure you check that out, all right? Let me see here. Mark says, speaking of how all that, what he was talking about earlier, will spill over globally. Already my comments on 10 cent, we will feel the effect sooner than anticipated. Yeah, I think we may still have a little bit further upside, but I think it's borrowed time now. I'm not sure how borrowed that time is. Maybe it tops out prior to Q4 and just starts dying off in Q4. What a Christmas, huh? But or what a holiday season, man. If the economy started dying off prior to, right around the beginning of Q4, man, that would be awful for retailers because, they have all their holiday shopping and whatnot coming up there at the end of the year. That wouldn't be good. If it can hold off till the end of the year, retailers might see one more quarter of good sales, and then kind of go down the tube after that. So we'll see how this plays out. As always, you guys, no guarantees. Things change, if new information comes in as it's going on there, and things can be can be extended or even just completely reversed. But I don't see a lot of positiveness over the last few years. I see a lot of the indicators that we watch that the pros watch are at or above levels that they were in 2008 with the great financial crisis, 2001 with the 2000 with the dot-com bubble, 1987 with Black Monday, even 1929 when we started that Great Depression, when we hit the top there right before the Great Depression. All these indicators very stretched out, and now we're stretched out beyond that. As I've been talking about, guys, I believe we are finishing up. We were coming to the end of the everything bubble, the credit bubble. And that's why you see all this, you hear about all this cash. You hear about all this fiat supposedly being printed by the Fed. And then you see that some prices are they say inflating, some prices are rising. And you start to say, oh, it's because they're printing that money. But if you really look at it, as we've talked about so many times before, that money isn't actually entering the system. The only place that money is having any effect really is on the asset prices. It's those supply bottlenecks and production bottlenecks that are causing the other prices to rise. And then there's speculation, rampant speculation, again, with what we saw with lumber, wheat, other stuff that ran up there. And now they're, starting to drop back. And so, you should always become concerned in markets, guys, when everything is going up at the same time. There should be some things going up, some things pulling back. If everything's going up at the same time, that means people are just throwing money in there willy-nilly. They're just throwing it in there. And that's usually a sign that an end is coming. Everybody's they got all this money. They got to put it somewhere. So they just kind of keep putting it. Usually, that's going to end not well for them, for us, for everybody. So the only positive thing on all that is that U.S. dollar strength, which, like I said, we've still got some levels to get through. We'll take a look at the DXY today too. But, if it continues up, I mean, it just kind of puts the nail in the coffin for everything else. including Bitcoin and cryptos. But again, Bitcoin may be able to run up through the end of the year, which is what I'm thinking, before it does get that real big bear market kind of thing. So we'll see. We'll see. Let me see here. Let's see here. Kind of catching up with you guys here. Samir says, getting better, waiting for the price to come to me rather than going after it. Made some funds back with that. That's the way to do it, guys. You know, patience is one of the most important skills that you can have as a trader, and yet it's the one that most people coming into trading lack. You know, we're not inherently patient, and society today makes us want things now. You know, credit's so easy to get, right? So, hey, you know what? You want that $50,000 car? Hey, you know, it's no problem. Come on, get some credit. You know, stuff like that. But now, you know, things are starting to slow down. You know, bank credit, whatever, is starting to dry up. We've been watching over the last year. You know, and if we look, you know, going back to what I was saying about inflation earlier, you know, inflation isn't created at the Fed. Inflation is created at the banks, when the banks actually create loans. That's when inflation is created. That's when real dollars are being created. When the Fed's creating it, most of it ends up going into the reserves, so the banks can point to those reserves and say, we've got the reserves to make the loans we're going to make. That's where most of it goes. The other bit of it, it goes out there, you play with the primary dealers, it goes back and forth between the Fed and the primary dealers, basically, you know, and it gets swapped back and forth with treasuries, you know, and all the while that just kind of inflates asset prices, and that's the goal. The goal is to inflate those asset prices to get people feeling better, to get people feeling good about the economy, to get out spending, because unless you're out there actually spending money and taking out loans, there's not a whole lot the government can do, guys. Like I said, that monetary creation comes at the bank level. So if you're paying down loans, that means throwing money back into the banks, guess what? That has a disinflationary, deflationary effect, excuse me, on what you're doing. Because you are now sending dollars back. They're not out here circulating in the economy, okay? And if on top of that, if the banks are tightening their lending, which we know they are, we've shown it through the Fed site, you know, St. Louis Fed site there, we know that banks are tightening their lending standards. They're not lending as much, which has itself a disinflationary, at the least, potentially deflationary effect, because you've got less dollars being created, right? So less dollars being created, more dollars getting paid back in. The money out in the real world that's actually circulating is dropping. That's why people look at the M2 supply and they go, look at all that money being created. And yet they're not getting the effect they're looking for. Now, right now, they continue to try and associate some of these higher rising prices on that. But again, I think that's more related to production and supply bottlenecks. You know, you look at things right now, chips. You know, we've got that chip shortage right now. And so everything from cars to electronics to whatever, their prices are skyrocketing because, you know, they're limited in supply and everybody wants them, right? But they don't have the chips to continue making, you know, more to keep up with that demand. So you're getting the price rises from that. And of course, you know, again, the other areas, you know, where you can't get certain things. If you go, have you guys been to the grocery store yet? I don't know about you, but I was just there this past week. And I noticed a lot of stuff on the shelves, not even there. And it's so weird to see that, because we're used to, prior to the pandemic, shelves were always full. And now, you know, you've got these areas in the shelves that aren't as full as they used to be. And so, you know, again, guys, you take all, and that's because we've got those production and supply, you know, shipping bottlenecks and all that going on. So, you know, you've got to be aware of all the information out there. Understand that usually when it comes to macroeconomics, the easiest answer is usually not the correct one. You know, and the easiest answer is, oh, the Fed's printing all this money, so all the prices are rising. But if you're wrong on that, if you're playing the market with that idea and you're wrong on that, guess what, guys? Guess what? You kind of, you end up getting caught. You know, you're going to lose a lot of money with that. Oh, let me see here. We'll come on up over here. Let's pull up the Bitcoin. We'll see what we got going on here. Let me kind of check in with y'all. ARM, what's up, man? Eureka, what's going on? Is it good long Bitcoin on this support? I think it may be. We want to see some higher breakout here, but right now it's following in with the count that we've got. So, those of you that have been following me, you know that here I posted this chart right here, talking about this the local break, this very small time frame accumulation range, and then this nice breakout here. And this is the catalyst that led to a 35% rise. I mean, that right there is what led, that was this right here. This led to all this. So you're looking at a rise here on that breakout of 35% so far, and I think we'll probably get at least up here to 45.66%. But how many of y'all bought down here? How many of y'all really bought down there? Not many people. And that's the way it usually is. It's the same way back in 2018 when we were around 3,100. And I said, listen, that looks like that's the bottom. We should be good to go. And, very few people actually bought down there. And, of course, price went up. And everybody got scared at 4. And everybody got scared at 6. And I was like, no, it's going to keep going up. And then everybody jumped in at 12 and some change. I said, no, we're coming up to the top. And we did there, June of 2019. And so, that's usually the mindset that's going on. With traders, with retail traders. They wait and wait and wait, and then when they finally decide to jump in, price changes, right? So you got to be careful with that. Patreet, how are you doing? Good to see you checking in. I'm going to kind of catch up with you guys here. Samir says, only problem I face is when I get out of the trade. Any tips on when to get out of a trade? Would love any suggestions on when to get out of a trade when it goes well. Anytime you're in profit. Here's the first thing you guys need to go ahead and make sure that you're getting in your head. Is that any profit is good profit. If you are consistently locking in profit, you are doing better than almost everybody out there. The problem is, as new traders, you often try and milk every penny out of it. You're worried that it's going to continue up without you. You get to this area where price kind of, sits there and it looks like it's getting ready probably to drop or something, and you're scared to get out because, you're scared it's going to continue up without you. Instead of thinking, okay, look, this is a good area probably to get out. I've made a good bit of profit. I can get out and look for another entry. Now, there's lots of different techniques with that, and I teach those every Wednesday for our Tier 3 members. So those of you that haven't joined yet, join us. I teach lots of rules-based strategies to help you enter trades. And so most of that fear that you guys have is you're scared it's going to take off without you, and then you're going to be like, oh, crud, well, I just got lucky getting in on this. Now I got to get lucky and get in. What if I get in and then it turns around and comes back against me? And so, we've got a lot of rules-based strategies that I've been teaching over the last year plus now to our Tier 3 members every week, where it helps you find a way to get into a trade, to get into a thing. So that way, you don't have that fear of taking profit. You take that profit, the fear's out now, because now you've got a way to get back in if it continues going. It takes a lot of nastiness out of it for you. But the first thing you guys have to really kind of get in your head is, if you're exiting in profit, first of all, that's a fantastic thing. That is an absolutely fantastic thing. Don't preface it or, put an asterisk by it, but it went up higher or something. No, you got out with profit. You locked it in. No matter what price is going to do, when you locked it in, you locked it in. Price could have gone the other way on you. And the fact that you're so concerned about it says that you don't know really a lot of what you're doing. So, hey, you got in, you made profit, you got out. Rinse and repeat. Because time and compounding will take over the rest of that so you can continue with what you're doing. Time and compounding, that's the secret sauce, guys. Not all this other stuff, not all these little tricks everybody tries to sell you on and whatever. Time and compounding. As long as you understand proper risk management and you use it every time, and you kind of get out of the emotional side of it, I mean, you're 15 steps ahead of pretty much everybody else out there. It's all it takes. Yet those are things that most, new traders aren't willing to invest the time in understanding there. We're our own worst enemies when it comes to trading, guys. Trading's been great, Chemo. Thank you for asking. Let's see here. Higher Low Crypto says, if you've been following Chris's BMA Bitcoin videos, the BMA is our Bitcoin market analysis that we do. that I do 3 times a day for them, at least 3 times a day, sometimes more depending on how that price action is. He says, tracking the movement, it's a great example of how to not follow rumors like the Amazon one and how the technicals played out as I've been speaking about over the last 2 weeks. Yeah. You know, again, guys, you're going to have everybody and their grandmother talking about price rose because Amazon said this and the price dropped because Amazon denied that. And, you know, the reality of it is you should have been in before that news stuff happened. It was already happening. The reversal was already coming at that point locally. Like I said, that break out of this range right here. We had our targets. The only thing it did was it went up quicker and further in this area here than what I anticipated on Friday. And that happens sometimes. That's part of trading, guys. But nonetheless, it went up to my target. It just got there a little differently, but it got there. You know, and now we're pulling back here, and now we've got some more extended targets here, looking up here toward this. I've got a minimum target here of 41,665 or so, but I think we're probably going to see it targeting the top of this large range, right up here at the R3 pivot on the 1 and 4 hour there, right around 43,650 or so. I think that's probably where price is headed. Now, the question is, if it does this, is this just, do we have just 5 down and this is A, and then this is a flat correction here for B? So A, B, C here for B. You see that? So you get A, and you get B, and then you get C up here, right? Now, if y'all remember, when we were down here, I said if we were headed up, that we were probably targeting this wave 4 area up here at the top of the range. So we're pretty close to that. If we pop up to where we're at, I'll have been correct, right? Now, my only thing is, if we do that, here's the thing. That's a pretty long wave C. And now it doesn't mean it can't be a wave C, but once you start getting around 1618 or further, that usually starts, you should usually start leaning toward it being like a wave 3 rather than wave C. Because what we generally do is we measure out wave A, put it at the end of wave B, and then we look for wave C to target 100%, which would have been down here at $36,028. Instead, we're all the way up here at the 1618, which is usually a wave 3 target, and we've got potentially higher up to go here to get us almost up to the 2.272. So this wave C, if this is a C, will be over 2 times the height of wave A. Again, I'm not saying that can't be, but if that's happening, I'm going to start looking this as a red count here. 1, 2, and then this is a 3. Now, so here's the thing. If this is a 3 up here, if we make it up to this area, and that's 3, then we should look for price probably to target this 36,366 to 37,428 kind of area. Because on that, let me go ahead and pull a thing to measure this out here. See, depending on if you get here at this lower target, let me kind of flip this around real quick here. I'll show you why I've got this green range here. This green range is nothing more than the 38.2 retracement. But as you can see here, it's the 38.2 at the bottom of it if we only get to the local target, the 41,665. But if we make it all the way up here toward that R3, then it's the top of the green range is the 38.2. So that's why I have that green range there in that range. If we get to the lower one and come back on us, then we'll look at that lower end of the range. If we continue up toward that R3 pivot, then we'll look toward the top end of that range. Now, that's just the initial target. We could also hit the 50%, which is just a little bit lower. But notice this 38.2 to 50% is the top of this smaller local range right here. See this range right here? And so within this range, again, you've got the large volume, large candle spread breakout, the jump across the creek here. Because locally right here, you've got your selling climax, you've got your automatic rally, get your push up, you've got your, I hate to call this a spring here because it doesn't pop right back up in on the 4 hour there. But if we were to look at the daily, it would be a spring. So we'll just say spring here. And then you get this show of strength, last point of support, show of strength, last point of support, jump across the creek right here, which is that resistance. And then we get the show of strength, and then we get this back up to the edge of the creek right here that we're at, heading for another show of strength here. And so, it sets up for a really good move. Now, if this is just wave B up here and we've got wave C coming down lower to, maybe 23, 24,000 or something, well, in that case, we're going to expect price to drop through the low here. And so I'm going to be interested in, does price reverse in this area? Do we get something like this? Do we get this up here and then down here and then up here? Or do we get this move up here that continues to break down? So I'm kind of looking at this area as the telltale sign there. Now, I think price is making a lot of good arguments for higher up, but we need to see it follow through and do it. In terms of this larger range, as I've been pointing out, we've got basically, potentially we've got the selling climax here, automatic rally, and then we've got a spring here, and then we've got a test, and then we've got a secondary test. Successful test, successful secondary test, because a lot of volume on that spring, very little volume. Whoops, on the test there, or the secondary test here, just a little bit of volume, and that's what you want to see. If you saw heavier volume coming in on these tests, then that would mean the market's not ready to move up. Less volume on these tests after you've had that spring says that the supply is just higher. Either supply is worn out, they're exhausted, they can't put any more in whether they want to or not because they spent it all coming down here, or it means that they just don't want to anymore. They're not interested in selling below this level. And that's why then you get this nice move up toward the top of this range. You can see that we've popped out above the EQ of this range here, right here, and we pulled back right above it, trying to head up further off that now. So that's what I'm kind of looking at right now. And if we're breaking out and heading up here, at this point, this becomes a 1, 2, 3, 4, 5. And that 5 is almost perfectly targeted to the EQ of this supply structure right here, which is based off the daily candle. If we go over here to the daily, you see this wick of this long-legged doji here, long-legged to the top, long-legged to the bottom there. That's a supply structure right there, and that wave 5 is almost perfectly set to hit that. By the way, the other thing you have to that you can pay attention to here is that you've got this high volume node. Let me get rid of a lot of this stuff here, guys. There we go. You've got this high volume node, and so here we are sitting at the top of it. As I've told you, if you're below it, it works as resistance. Once you pop up and get above it, it then works as support. So as you can see right here, it was support, and then it was resistance, and then it was support again, support, and then it broke down, then it was resistance, breaking back up, and it becomes support again. So you're getting that extra help from that area. Remember, all that is that doesn't tell you whether people are bullish or bearish in that area. It just tells you that there's more interest the further out this comes at those price levels. It doesn't tell you whether that interest is bullish or bearish. It just says there's more interest. So if price is above it, the interest is to keep price above it, so it becomes support. If price is below it, the interest is to keep price below it, and it becomes resistance. So we look at that, we've got that as well. We had a nice strong breakout above the daily pivot on volume and candle spread. That's usually what we're looking at, to continue up, but it is toward the end of the month, so we'll have to see where the next month's pivot gets in. Probably be up here a little bit, around 37.5, somewhere right around there, I'm thinking. Maybe. And so, as long as we're remaining above that, life is good. As long as we're above that, we should be looking higher. So we'll see. Again, we've got this clear area here. So if we're breaking out above this, we should sail on up into this distribution range up here. And if we're pushing up into that range, the odds are most likely that we're going to head up higher. So that's kind of how I'm watching all this as we continue to go here. Notice nowhere in there did I say it's definitely going to do this or that it's it needs to go up or it needs to go down. I'm just playing based off what the information I have on that time frame and what we normally expect things to happen at that time frame, or at that when price action looks the way it does and other things are kind of zooming in the way they are. Let me see here. Let me kind of catch up with y'all. Mads, what's up, man? He says it's a good free bit of info, that EWI thing, though some of the charts are confusing. Yeah, but you learn as you trade more and more, the charts become more and more Understandable. Remember, Elliott Wave, international is all about Elliott Wave. Now, occasionally, the people that they have there charting will look at other things, look at the DSI or something, and when they do that, there's not a lot of explanation on it, so it's something you have to look up yourself and figure out what it is. But it usually works out pretty good, and you do a little homework, you can look it up, you'll be fine. Let me see here. Oh, let me see here. Oscar, what's up, man? Devin, I see you checking in here. Let me catch up with you guys, see if you got any more questions or comments here. Higher Low Crypto says 10-year Carlos. Yeah, I just saw something on that. Man, it's getting ridiculous, guys. These prices, I mean, I still think back 2004, I bought a brand new Corvette ZR6. ZRX, what is it called? Yeah, ZRX. Man, it's been a while ago now, man. But anyway, I remember at the time, it wasn't anywhere near. The prices today are just so outrageous. I bought a dually back then too, brand new dually. I think I paid like 45 grand for it at the time. It was a higher end. And nowadays, to get that same truck, you'd have to pay, almost 100 grand now. So it's crazy with the prices of these things. Now, of course, like I said, lately, this last year or so, you can attribute, a bit of that to the chip shortage. I mean, I noticed, my vehicles I have, their trade-in values have popped up. One of them, trade-in value has popped up about 30% in the last 4 months, maybe 5 months. So it's absolutely crazy. But it's, again, it's the shortage and the demand still there. So until it isn't anymore. Real estate is starting to take a bit of a hit. It's starting to cool back down. And I noticed this, again, I keep watching real estate, whatever, especially the higher end real estate. And I see a lot of people there. It looks like they're starting to panic a bit. They didn't sell their $1 million house or their $3 million house. And so now they're starting to take these large price cuts, pretty significant price cuts. We've got 11,800 square foot home in a nice area over here, a nice gated community, Terramont, and it's dropped again. As a matter of fact, right now it's only going for 1.3 million, which is pretty significant drop for what it is. It's almost 12,000 square feet, 6-car garage, whatever. Yeah, I was looking at it. A little bit too museum-esque in there for me. I like my home to feel like I can live in it. That one's got a lot of marble and everything. You feel like you can't touch anything. Drive me nuts. But anyway, so yeah, I digress. 10-year car loans, man, a thing coming up. But or are they? Again, if the economy falls off a cliff here, coming up through the end of this year, beginning of next year, I mean, at that point, prices of everything are going to drop, guys. Deflationary spiral. It'll happen. And, that'll be a great time to buy. This is why I tell you guys, be careful with your money you're making on the way up. Make sure you're making it and you have it, because when things drop, you want to be able to use that money to buy in low. And I mean low. I mean something you can buy in, stock-wise or real estate-wise, and then just hold on to it for 20 years, and it just makes stupid profits. Kind of like, if you bought Amazon after the dot-com bubble and you just rode that up for the next 20 years. Something like that. A lot of potential buying opportunities at the end of that kind of deflationary event, that kind of potential, economic downturn. I'll be nice. Recession at the least, potentially a heck of a depression, maybe even. Question is, if it's a depression, is it going to be short-lived, or is it going to really just kind of, just get drawn out, depression into stagflation, for 30, 50 years or something. By the way, even if that does happen, guys, there's a ton of money to be made in the markets. Use the skills you're learning now. Just don't over-leverage yourself. Don't get to the point where you're losing all that money before you have a chance to make money. All right? White R21, what's up, buddy? Good to see you checking in. Mike Kane checking in from Florida. Man, I just saw something about Florida. Billions of dollars being pumped into West Palm out there. It's a pretty nice area. I've been there. Friend of mine, she was from there. Back in my early college days. The first time I went to college. When I was a young buck. Had a friend, she was a volleyball player. And her dad was some bigwig lawyer or something in that area. And they lived out in West Palm. So I was going to college in Florida at the time, so but yeah, I don't know why I share this stuff with you guys, because you guys are cool. That's why I like to hang out with you. Mad says just went to the supermarket now and all the shelves were pretty empty. I was surprised. Yeah, it surprised me too. You guys know I get so used to ordering and having it delivered. I rarely have to go to the grocery store anymore on my own. I just happen to stop in and check it out, and it was just crazy. Hank says he's short off 38.7. So where does that get you, Hank? That gets you right about... Did you just go short here, or did you go short over here, Hank? The initial drop or the current area? That's what I'm interested in. Rasta, what's up, man? Darren, good to see you, buddy. Let me see here. You said my tier 3 stock hot takes for Coca-Cola hit the next 1/3 of the breakout profit this morning. Cha-ching. Man, we have been rocking solid with stocks. I mean, we've done well with cryptos too, but man, and forex especially, you know, USD CAD over the last 2 months has been just a monster. But yeah, man, stocks, we've been just knocking stocks. So easy to get rich this past year off stocks, and we've been able to find so many of them at their lows before anybody else was jumping on them, which was great. Let me see here. Hank says, no clue who that is. Not sure who he's talking about. But this was an easy short. Still medium-term bullish. Expect to flip around 35 if given. Oh, you're looking for it to come further down here potentially? Yeah, I mean, you know, what are we looking at then? If this is 3 here. 35 you'll be looking at 61.8. I'm not a big fan of a 61.8 on a fourth. I mean, you know, it happens. It happens at times. But always get kind of sketchy on that. We'll see what happens on locally here. Let me see. If we zoom in here a bit. Yeah, it looks like we're just doing a wave 4 at the moment. 1, 2, 3, 4 maybe. Kind of zoom in a bit more of the 15-minute here. 15 minutes reset down and oversold. About to cross, trying to curl up here to cross bullishly. Let's see. So 1, 2, 3, 4, 5, 3, 4, 5. Oh, that might be 5 up. We've got 1 here. 1, 2, 3, 4, 5 is the leading diagonal. And we got 2. Then we've got 1, 2, and then we got 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Yeah, so this is a 1. We've got a 2 on the pullback right now. We're at the 15-minute pivot, which means we pull back almost 50%. So, you know, we would look for a reversal around this area here. If we do get that, let's see here. That'll give us A, B, and then 1, 2, 3, 4, 5. Yeah, we're finishing 5. So it's going to do 50% there. It'll come down to 61.8. So we'll go to the lower one here. That gives us a minimum 1, 2, wave 3 target up here, 41,196. And then 5 there at 42,115. Now that gets us right around this initial target for wave 5 here. So that's going to be interesting. Now the other thought is we could have wave 3 just kind of really take off here, break out above it, wave 4 pull back, and then wave 5 finish up toward that upper target that we were talking about just above the range highs here at 43.6, 43.7. But yeah, right now we've got a 1, we've got an A, B, and we're working on C here. We got a 1, 2, 3, 4. We've got a lower low here for 5, so we'll see. What you want to see is a breakout. Your first clue would probably be a breakout above this descending resistance. But that pretty much gets you around wave B here, which is what you want to see. So a breakout above 38,602 and 52 cents here on Coinbase. That would be your, added confidence that this 1 is and 2 are done and 3 is in the progress now. Up toward there. Now, if it was to, reverse from right where it's at, if that's the bottom right there, if that's the low, if that completes it, that gives us a wave 3 closer to that initial target there, right there, 41,519. And then, like I said, minimum wave 5 up here, 42,438. But within that point, you're already getting pretty close to that, within $1,000 or so of that, of the secondary target there. So we'll see. Either way, good target area. We just look for that pullback, hopefully, and then the move up. That pullback should get caught, within this area here. If this is a 3, and then this is a 4, and then this is a 5, the bigger picture, rather than this just being C. If it's bullish off the bottom, instead of C, this will be 3, 4 back to this area, and then 5 should be up to around 48,350 or so, 48,350. Mike Kane, thank you, sir. I appreciate it. Yeah, I had to finally grab some glasses there. Still don't use them as much as I should, but I'm trying to get used to it, to remind myself to do it. Let me see here. Hey there, Silvio. Good to see you checking in. Let me see here. Mark says, I made a rookie mistake and exited on a dot trade when I should not have. Still took profit, but had I done proper risk management, I'd be much further in the money. Learning is not easy, but it is fun. Yeah, but the good thing is there you did make profit. And so the better you become, the more used to it, and the better you are at it, the more profit you're going to make on each trade, and the more often you're going to make profit. The goal, guys, is just not to try and outdo yourself. Don't try and get there so fast that that you end up, putting yourself in a bad situation and losing your money. You don't want to do that. The last thing you want to do, which is what most new traders do, is that they lose all their money before they become actually good at what they're doing. They put all their money and then they're done, and it's like, whoa, wait, what just happened here? And then, they see price going off and they're able to do it, but they don't have the money to then follow after it anymore. So, yeah. Digital Mining Solutions, good morning, my friend. Good to see you here. Diego, what's up, buddy? I love Diego, man. He's throwing out charts left and right over there in with some of our other members there in the Bitcoin channel in Discord. He says, I'm totally sold on accumulation at this point. I'm not totally sold on it yet. I think it's making a good case for it. But I want to see it. My big thing, again, will be this right here. Do we make it up to this area, then pull back toward this area, and then push up again? If we do that, that gives us that 1, 2, 3, 4, 5. But if instead we continue down through here, that just gives us, again, the A, B, C here, 5 waves up for C. So, that's going to be my big telltale sign, I guess. But I'm leaning toward it. I'm leaning toward this being a nice accumulation area here, and price potentially being done in that area. Again, as I've been talking to you guys, what's really selling me on it is this area right here. And so, again, with that potential spring and test, even if you maybe, I was talking to Discord about this. I don't know that I buy this, but thinking maybe, you've got this large volume coming in here. This could be your preliminary support here. And then this is all sideways. And then this is your selling climax, automatic rally. And this just becomes your ST and phase B over here. And then you move up, and then you pull back here in phase C. You get your last point of support, jump out, edge of the creek. So you've got this, what becomes A, which is your stopping phase here. And then B is this right here. And then C becomes this range right here. And then this range is E, your interior markup. And then this is, or D, your interior markup. And then this is E, your exterior markup here. In either case, the important thing that you should be noticing, paying attention to, is the fact that at these lows, you're getting less and less volume. See how the volume pictures drop off here as you're coming down through there? It shows less and less interest to sell at those levels. And all things held equal, if you're not selling, price is generally going to rise. People are going to buy All things held equal, people are going to buy, they're going to nibble, they're going to something. And if you don't have supply coming in to hold it back, it's going to rise. It's going to float up. And so, again, you're showing that lack of supply continuing to come in, as each low was made there. Even these two, again, which don't get down here, but they're less and less. They're testing this area. Just not any real interest in selling compared to what it was here and what it was here. And then, of course, like I said, we had the breakout here, large candle spread, large volume. So it's making a great case for this to be the bottom here and to head up. But we still need to see that follow through coming at. First time I've ever talked about a vehicle. I think I've talked about vehicles before. I have my taste. I know what I like. Let me see here. Where in Florida did I live? I lived in Pensacola and I lived in Jacksonville. So those are the two places I've lived in Florida. I'm in Texas now, though, but yeah, I did live in Florida a little bit. Pensacola when I was middle school a little bit, right as I got into high school first, and then moved back to Texas, then Ohio, and then back to Florida, finished out. And then for college, first time I went to college, Jacksonville, University of North Florida. Tell you what, man. Some good views during those days. Those are some interesting times. I wasn't ready to go to college then, but I knew I just didn't want to work for anybody else. Let me see here. Christopher Arksky, if you're talking about 10% correction, I think you'll probably be talking about larger on that S&P and NASDAQ. Let me see here. Let me see. Let me pull up a chart here real quick. I've got the NASDAQ composite right here. Well, you know what? Let me look at the, real quick. Let's talk about the DXY here, and then I'll throw it right on top of this. Well, you know what? We don't have to. We can just do it. We can just pop it in there. Then we'll come back to the DXY. Oh, man. That's been a lot more of a sell-off this morning. So I was looking at maybe like a 1, 2, 3, 4, 5. Give us a 3, 4, 5. This is, woo. Yeah, that's a big sell-off right there. Let's see here. I've got this right now. 1, 2, 3. This 4 is dropping back into this 1 here, so that count is going to be invalidated. This is the 15-minute. This could be 5 here. This could be 3, 4, and then this short 5. Let me see what we got going on. We're dropped there, man. That's an impulsive drop there below the pivot on the 1 hour. 4 hours just starting to go over. We got this bearish divergence here. Right here. That might be the start of a big move down. Maybe. Let me see here. But yeah, I mean, that is just ugly, guys. I've got a 3, I've got a 4. That could be 5 right there. Because that's a big move down. I'll be really considering this is 5 if we're dropping below this swing low right here, this wave 4. This is my wave 4 at 14,178.66. But even on this daily here, we've got this bearish divergence as well. Whoops. Oh, okay. I've already got it on. Oh, that's the 4 hour. My bad. Daily. Yeah, we've got it here on the daily right here. So, like I told Discord, if it drops below that level where it dropped below there, or, this could be a more significant top at the, put in up here. We've got a doji, and we've got, we gapped down on the open here. Down here, that's not a good sign. Yeah, I mean, I'm interested in seeing, do we drop below, for the bigger picture, do we drop below 14,178.66 here? Yeah, because I've got 3 here, and then a flat correction is a 4. 1, 2, 3, 4, 5 could be done here. Big picture, if we get a drop below that swing low, I'm looking at probably maybe macro top in, maybe. If we drop them below this, this will give us a double top here. So that'll give us a pattern target. Got all these things just showing up here. But based on that, if we're dropping below that swing low, we've got a pattern target down here of 13,475 or so on NASDAQ Composite here, which takes us below this ascending channel support here, which should indicate that we're headed down off that. Yeah. Man, silly. Silly trading view keeps moving stuff over here. But yeah, I got a 1, 2, 3, 4, 5 here. You notice the top is rounding here. So again, 1, 2, 3, 4. 1, 2, 3, 4, 5 here to give us 5. We've kind of got this rounding going on here. From a pivot standpoint, I don't like the fact that we were up here, we bounced off the pivot, and then we're rejected right there at the R1. That should make longs nervous. It doesn't guarantee that it has to drop down in reverse, but this kind of setup normally sends price back down below. If it's bullish, it should go from here and pop out above that R1 and continue. The fact that it gets rejected there again should have you cautious if you're long or trying to be long. Let me see here. Yeah, so I mean, if we're looking at that, that's a heck of a drop going off there. That 15-minute. Yeah, we'll get a little bit of a bounce here, but I expect further fall. I don't expect to fall, to turn anytime soon. I mean, we've got 1, 2, 3, 4, 5 as a leading diagonal there, and then 2. Let me see where we've got this going. So this is what I was looking at to get that 3, 4, 5 here. But it just continued down. 1, 2, 3, 4, 5. So 1, 2, 3, 4. This may be 5 right here. This may just be a 1 or an A. Remember, we're looking at, does it get below this swing low here? As long as we're just in 3 waves and it stays above this swing low and breaks back out, we're fine. Go up higher. But this could be just, wave 1 of 5. But that pullback right now is already... How far is that already? I mean, we're almost at 50%, and it's just finished 5 waves down. So that makes it real iffy for an ABC, but we'll see. We'll see how it continues to play out. We could just have like a good bounce up here and then a short lower, C, and then kind of takes off up there. But that's a big move down today. Yeah. Let me see here. So if we're looking at that, if I look at the DXY, Hank's really hoping that goes down to the low 80s. Really, really hoping. Which should make him nervous if he's hoping that hard. I think what we've got here, I've adjusted the count a little bit here. I think we've got a 1, 2, and then 1, 2 here. So looking for this to continue down here toward the 61.8. Retracement there. And then we should head up further there. You can see here on the 4-hour, we've just about reset into oversold on the RSI. Stoch RSI is pulling back into oversold. Daily, we're pulling back down into oversold here. This right here, we've got this this bearish divergence, bullish divergence, or bearish divergence, hidden bullish divergence, bearish divergence. Hidden bullish divergence potentially popping up here between, if we look here, between these most recent lows here. So looking for that breakout to head back up. Nothing overtly bearish looking at this at the moment. We generally would expect price to get near, as I continue to tell y'all, your first subwave of your move of your next wave of the larger degree up usually finds resistance around the previous wave of the larger degree. So 5 up here gets us, pull back for a 2, then continue up for a 3, breakout above here gives us a potential double bottom. Targets up here at 97,626. I mean, again, we looked at this and everything else we've looked at, on these things. Again, just where it's finding support. It's finding support right here in this previous area of support here, which is right aligned with this whole resistance. So price hit resistance in this area right here. Shot up through it. When that happens, you come back and you retest as support. It did. It came up here, made a higher low. Retesting higher up for that support there. If you zoom out to the monthly, of course, you've got this hidden bullish divergence here on the monthly. Right there. And you kind of you've broken out of oversold over here and moving up. A lot of big monthly candles here. So want to see some breakout. From the monthly standpoint, what you want to see is an impulsive breakout above this swing high, which is just above your monthly pivot there at 94.742. That's also my wave 4. So I've got this like a 1, 2, 3, 4, 5 here coming down. And so, yeah, I mean, kind of looking at potential. I mean, there's a couple of different ways looking at this. Locally here, this could be, ABC, or I'm sorry, 5 up, 1, 2, 3, 4, 5. ABC, and then 5 down. Gives us a flat correction here. And should, head up off of that. But as far as, general areas of support and resistance, I mean, it did a great job of where it bounced here. Potential double bottom. Again, we've got that right here, this hidden bullish divergence right here. So a lot of good macro, larger time frame reasons to think that the bottom's potentially in. But until we're getting above 94.742, I think you still have to be careful about it. But if this thing keeps going up, there's no reason to be, to think that all your other stuff is going to keep going up. Because that's going to exert a lot of downward price pressure on everything else. Again, 1, 2 here. And off this move down, you've got this bullish engulfing candle here. And you just want to see some follow through higher. Nice, beautiful rounded bottom here. Kind of the same thing we saw in USD CAD, if you guys remember. We're looking at that. Had a beautiful rounded bottom. It wasn't double bottom like this, but we did have the rounded bottom there. So you got Adam, Eve, potential bottom here. So we'll see. We'll see what happens. But, you got to be prepared for that potential to be flying up higher there. If this count is correct, then we should see price flying through the end of the week much higher. Wave 3 off this 61.8. Wave 3 would have a minimum expected target of 94.888. So 94.888 takes us above wave 4 here. So, yeah. We'll see what happens with that. Let's see here. Christopher says, holding a UVXY position, just been burned so many times. Holding a short for too long. Yeah, you got to be careful on some of those. If it's taking... If you're trading counter trend and it's taking a while to make its move, I'm just not a big fan, especially if you're a newer trader, to be trading counter trend. Trade in the direction of whatever time frame you're trading on, the trend in that direction. but that also affects how long you hold it. You know, if you're looking at a 15-minute time frame, you know, you shouldn't be holding your position, you know, on a 15-minute time frame chart for days and days and days. You know, you should be making a shorter term trade if you're looking at this shorter term time frame there. But yeah, I think we've got a lot going on there. Let me see here. As a Canadian, you've held the majority of your retirement savings in USD and or US securities. I've had to experience major currency swings. Was great when COVID hit and a hard USD CAD bleed since. Yeah, that was a big bleed since. But looking at that, if we zoom out here, this is what I was talking about in terms of the USD CAD. Look at how beautiful that is. I mean, that's almost a perfect rounded bottom there. And so then we get this move up, a little bit of bearish, very slight bearish divergence there. Price coming down a bit, finding support right here, you know, on this previous resistance. This is the daily. You can see here that we are about to trying to cross bullishly here, down and oversold. So just looking for that breakout to send it higher, and continue moving up there on it. If we zoom out to the big picture, though, look at this. Let me see, is it on this one? Yeah, I've got a few things going on here, but basically, if I'm looking at this, let me do this. Let me go ahead and make this quiet here. If I'm looking at this, again, I've got a 1, 2, 3, 4, 5, and then I've got ABC for A, ABC for B, and then I've got that 1, 2, 3, 4, 5 down here for C as a flat correction for a wave 2. And if that's a wave 2 right there, I mean, at that point, if it is, you're looking at wave 3 up here at over $2. Now, if this is the other possibility, or I guess I look at this, I go 1, 2, 3, this could be 4. And this is my first thought, is this is going to be a 4 as a flat here, leading diagonal, and that gets you a minimum 5 up here at 1 and 1.52811. So that's, you know, that's my initial target right there. Looking at this as maybe a 1, 2, 3, 4, 5 as a leading diagonal. But again, this could be a 1, 2, 1, 2 heading up there. So in either case, the larger picture, like the dollar for the CAD, for the USD CAD, looks really kind of sexy. I'll be honest with you. You can notice here on the monthly, you've got a bullish engulfing candle off the S1 pivot. You've got Stochastic RSI here, bottomed out, crossed bullishly, breaking out now. RSI stopped just short of getting to oversold there. You know, and if you want to look at it, let me see here, what's this? This is low right here of 206.13. Let's see here. And it's just slightly lower there at 200.68. But, you know, if you're looking at overall here, you know, you've got this. You've got a lower low coming off here, where you've got the same higher low, much higher low coming off here. So it makes a lot of sense. You know, I would have maybe said, okay, maybe we've got a double top here, but that thing bounced. It reversed right off that swing low there, rather than crashing down through it. So yeah. Tell your writer says USD CAD will go to $2 and they won't allow me over the border to spend my tourism dollars. Bill, good to see you, buddy. Good to see you checking in. Christopher, you're welcome, man. Like I said, you know, there's never any guarantees, guys. I will never guarantee you that price is going to do anything. I'll leave that to the yahoos out there who just want to tell you what you want to hear so you spend your money with them. But, you know, when I do have positions, if I do have ideas, they're supported really well with the charts, and then often with, you know, more macro ideas. Like I said, that quote at the beginning, you know, you can look silly for a long time before you're proven correct, you know, with the markets. Pros know that. Retail will give you a hard time and tell you you're an idiot and tell you how wrong you are while they're losing their money left and right. You know, it is what it is. So make sure you guys, you know, understand that when you're doing this, so you're not looking kind of silly out there, you know, attacking some of the people that are out there. If we're breaking out above this area here, I think we're probably headed minimally up to this breakdown area here. So we'll see if we can't get that coming off there. And at that point, excuse me, at that point, we'll see if this is the low here or if it's just A, B, and then a further C before it finishes up. I don't at this moment think that this is a top overall. It could be, but it would need to break down, you know, quite a bit further here to really kind of say that. I think, you know, we need this breakdown below this swing low here, way down here around 1.22, you know, 5 or so, to really kind of say, okay, maybe that's probably the top there. Otherwise, we might just end up having, like I said, a move up here. This becomes an A, this becomes a B, and this becomes a C. But right now with Discord, I'm looking at this as being done potentially, and this being a 1, 2, 3, 4, 5, getting kind of as it moves up there. So if this is the bottom here, this is going to make us for some great longs, U.S. dollar against the Canadian dollar. And I mean, and that would seem to kind of coincide with what we're looking at here, potentially being done as a 1, 2, and then finishing up, you know, 1, 2, 1, 2 here, and then heading higher. So just keep your eyes on that. Let's see here. Oh, I know you were just making a joke, man. I know that. Do I look at gold? Do I own gold right now? Not anymore. Is it something I look into when stocks overvalue? No, I don't buy the whole gold is you know, a hedge against this or that nonsense. I play the charts. I play the charts. So, you know, right now we'll see, but you know, my gold target's down there, you know, $1,000, $800 in that area. So we'll see if I get it. But I think the narrative doesn't fit the actual gold price movement as far as it being this hedge against this and that and whatever, if we look back historically at it. So just trade the charts. I don't think anything is really a hedge against anything else, guys. I think at the end of the day, stuff is going to go up or it's going to go down. Play it according to the charts. The narrative's been there forever and a day, so people buy it. They go into it. I bought it at first when I was first, you know, bought the narrative when I first got in, but not anymore. Yeah. You'd love to hear me talk to Peter about gold. You know, the sad thing is, I find myself sometimes hesitating to share some of his stuff because outside of gold, he has a lot of good ideas generally about markets. I think he's not as well informed as he should be as far as politics and monetary policy and inflation and stuff like that go. But then again, who really is out there? There isn't a lot of them out there. You know, not a lot of people kind of look at, you know, what's going on with everything the way that I do, or, you know, people that I've kind of introduced you guys to, you know, with their links and everything here, you know, Stephen Van Meter, Colorado Travis, San Diego Capital, people like that. You know, we have a different view on the way that we understand monetary policy and what's actually going on with the printing, you know, that's going on there. Peter's just like everybody else for the most part out there. Oh, the Fed's printing all this money. There's inflation. Look at prices. Oh, you know, and that's the limit of it. But he does make some good comments every once in a while. But I kind of cringe to share them because I know I'm going to have to, you know, sift through everybody giving me a hard time about sharing stuff with Peter Schiff. So it always gets kind of interesting with that. You guys are terrible. Don't do that to us out here. Yeah, Peter Schiff, you know, but Peter Schiff also has a business. You know, his business is based on people buying gold. Just like Pomp and Jason, you know, and a lot of these other bigger names in the crypto space that you've heard of, you know, they have businesses that are tied to crypto. And so they need y'all to go out there and buy. If you're not buying, their business is suffering. And they're not going to say that. Just like the government's not going to say if you're not out there spending money willy-nilly taking out loans and taking out more than you can afford, then, you're kind of hurting us, hurting the economy because of the way it's all situated. The government's not going to tell you that. The same way they're not going to tell you that. But it's the truth. It is what it is. You guys just have to understand. It doesn't make them bad people. You just have to understand what they're, what they are. And a lot of times, these business owners that are, that have that kind of exposure to the underlying asset, a lot of times they really believe what they're saying. They don't just say it just to say it. Now they have to say it because, again, it's their business and they want to get more business. But they believe generally in what they're saying. But you have to be careful, because just because they believe what they're saying doesn't mean they're correct. And that can get dangerous for y'all when you're new traders. Again, like I said, the biggest hurdle you face coming in as a trader is not knowing what you don't know. You don't know what you don't know. And it can hamper you quite a bit. You've got to be careful with that. But there's a lot to be made, a lot to be learned from everything that's going on. Whether you're with us or not, my advice always is get to learning about risk management. It's the most important thing you'll ever do as a trader. Most people out there, they won't tell you that, or they'll kind of say the words, but they won't follow through on their own side. There's none of that going on. But most people won't even talk about it, guys. Not to the level that I talk about it and discuss its importance. You make your money with your risk management. Period. End of sentence, guys. You don't make your money with the magic formulas and ways, strategies that we trade. You make your money with your risk management. Why? Because we're human beings. And there are no guarantees about what price is going to do. And we're going to be wrong, especially in the beginning, a heck of a lot more times than we're going to be right. So without proper risk management, you're not going to survive until you're right enough. And then you're good enough to make more money than you're losing. And that's what happens. Most new traders come in, 3 months later, they're out. They've lost everything because they never got a hold of that. They never understood the importance of risk management. They thought it was boring. They don't want to do that. They want the cool stuff. They want to buy it right here at the very swinging low point and then sell it way up here and go, look what I did. And they lost their money instead. Because even pros, even people who have been doing this as long as I have, guys, we can't guarantee what price is going to do. We have our ideas based on things we know and based on the information that's out there. But two things. One is we've got superior risk management. So we're not scared to be wrong. We'd rather be profitable than be right. Okay? Make sure you understand that. I'd rather be profitable than be right. Okay? Which means good risk management. But we also understand because of that new information is going to come in all the time. New information is coming in all the time. And what we think something may be with that new information coming in regards to charts, new chart price action, that ends up, we get that and we go, okay, well, now the information's different. Now the charts are different. Not the same thing anymore. So if it's not the same thing anymore, why am I going to continue to hold the same position? But again, what you generally get online is most new traders will get out there, be like, oh, look at you changing your mind and shifting your position. Ha ha, you're such a loser. And really, they have no clue what they're doing. I mean, if that has ever been your response, understand now, don't do it anymore. You look silly. Being a trader means you can change your position, means you have that ability to change your positions, guys. And you should if the information is different. The information changes. It's not to change your position just because you get scared. Good risk management should protect you from being scared of entering. But you change your mind, you change your ideas when the information changes enough to materially change your position, guys. Don't hold on to a position just because you feel like you have to because you said it publicly or something. That's the dumbest thing I've ever heard. Don't do that, guys. I say that like that because that's what new retail traders generally expect. They expect you to hold it no matter what. You're either right or you go down with the ship. That is the dumbest thing. That's why they're not around after 3 months, guys. And I hope this is helping you guys feel a little looser and a little bit better about being able to change your minds when you're trading. Because that, at the end of the day, none of the yahoos online giving you heck about what's going on are doing anything. They are not supporting you. They are not making you money. They're not doing any of that. Who cares what they think? If somebody comes up to you like that, I'm going to tell you right now, they're an idiot. It just is what it is. Make sure that you don't get caught up in their idiocy, in their small-mindedness, in their naivety, in their lack of knowledge. So much so that it keeps you from doing the right thing. In life as well, guys, doing the right thing is often the hardest thing. Because we're concerned about what other people think or will say. Right is right regardless of what anybody else says. All right? Like I said, guys, the way you live your life is the way you're going to look at the charts. So if you really want something that helps you with your trading, look at how you approach life. Do you believe that you can do more than what you've done? Do you believe that you are in control? If not, work on that. I promise you, you are. I promise you, whether you, and to prove it, whether you believe you can or you can't, you are correct. Your mind will believe whatever you tell it. So why not tell it the right stuff? Because if you believe that you can control your future, if you believe you can make things change, make things happen, then you're not a victim. And if you're not a victim, you're able to accept responsibility for the mistakes you make and move on. Most people, when they're trading, guys, they can't accept responsibility. It's everybody else's fault. It's Wall Street's fault. It's the whale's fault. They manipulated you. They manipulated price. They lied to you. It's the guy you're listening to online who said buy here, sell here. It's his fault or her fault. The only person's fault it is yours. You got into a thing that you had no clue what you were doing. And you thought somebody might know what they're doing, and you decided to listen to them without learning. That's on you, guys. It's not on anybody else. But the problem is people do that, and then they hold to that, and they never get beyond it. They're out of the market. They're all ticked off the world. They stole their money from them, all that kind of stuff. That's why I said, that's a victim mentality. You cannot have that as a trader, guys. You have to believe that you have control over your future. Otherwise, why would you think you could go in here and make money? Right? If you don't believe you can do it, why are you even here? So make sure you don't have that disconnect. Don't come in here thinking you can make money and then in the real world be the victim. It's always everybody else's fault. It's never your fault you don't have any responsibility in what happened at all, ever. You didn't make any choices that led you to that time and place. All right? Strong life lessons here, guys. And I promise you, they will affect how you trade. Okay? Let me catch up with you guys here. Sorry, I see you guys got all your info. You're talking here. I can't even talk. I can't even say it. Words are hard now. Since Trudeau likes to spend as much as Biden and oil has had its bounce, USD CAD to strengthen or flatline. Oh, wait. Okay, you were asking that afterward. Yeah. Again, I think oil's potentially topping out. If not, it's got a little bit further to go. Rising oil prices give the loonie a boost, because of 25% of your economy or so is based on your oil exports. So, if price of oil is dropping, the loonie takes a hit. If the price of oil is rising, the loonie tends to rise with it. But, in the USD CAD pair, of course, you have, the USD in there as well with it. So, yeah, watch oil. Oils are usually a good, because the loonie is a commodity currency. So oil is a good proxy to watch. Let me see here. Kind of catching up with you guys here. Can you actually look at charts when it comes to AMC, for example? What do you mean? Can you actually look at charts? Sure you can. Why wouldn't you be able to? Let's see here. How old are my AMC charts? Wow, this is like January of 2020. Oh, I've got one here from, looks like just a few months back. Let's see here. What were we looking at here? I was looking at the time 1, 2, then maybe 1, 2, 3, 4, 5 gives us a 3, 4. That's obviously not played out here because we've popped off. So let me see here. So if we look here, let me make a new chart. Important thing is always to have your validation and invalidation level, folks. Let me see here. Zoom back out to the weekly. Here we go. This is a nice bit of a double bottom right here. So our target off that, just off that pattern target right there. Let me throw it in here real quick. About $5.89 above that point. So yeah, you know, it just went a bit higher here. I say just a bit, it went a lot higher. I mean, if I'm looking at this, this is looking, where is the low here? 191, 195, 195. Okay, so our low is here. And so the pullback here. By the way, we're on the weekly here, and you can see we've got this strong advance, strong breakout through the pivot all the way up to the R5 there in the matter of a week here at the beginning of 21, of end of January 2021 here. So that pullback comes back just beyond the 50% mark there, okay? So it's probably a 1, 2 here, and then 1, 2, 3, 4, 5. So 1, 2, 3, 4 is what I'm thinking. Oops, let me do that. Do this right here. So if I'm looking at, and you're getting this reset down here, this nice reset down and oversold on the weekly as well. So again, 1, 2, 3, 4. Let me make sure that 3 isn't shorter. Shouldn't be. That's 1618, it looks like. 1414 there, yeah, just above that. So again, probably looking at this is like a why did I get ABCs there? 1, 2, 3, 4, 5. And then that would make this here then 1, 2, 3, 4, 5. And this, of course, then is 1, 2, 3, 5 right there. And so you can see right now we've got an A, we've got a B, we've got probably a C down here, right here at that 38.2 kind of retracement area. Of that there. And so I'm looking for a breakout above wave B, which is this swing high right here. Excuse me. What is that? $64.96. That should confirm this count. That gives us then a likely wave 5 up here, 124.06. Let's see here. And so that would be kind of where I'd be looking for that next target on that. This wave 4 is likely to pull back around this wave 4 here. That wave 5 will go up a little bit higher there. If we can get a breakout above here, that's what I would be looking for that wave 3 there. So, yeah, but a nice little double bottom down here. Worked out well. Sent price up. It came back. It found support generally in this area here. Sent back up. It's coming back now, finding support in this This kind of area right here. Let me see if I can get it. There we go. Right here we've got this kind of area. So yeah. Things probably looking pretty good at the moment. If we zoom in for the daily. So actually, let me zoom in a little bit more here. Might be a little bit higher up there. This looks like an A, B, and a C here as a flat correction. So actually, we're going to have to get above this one right here. 68.80 or so. Kind of get this open a little bit here, make it a little bit easier to find. Yeah, you've got ABC, ABC, and then you've got 1, 2, 3, 4, 5 here. Looks like 1, 2, 3, 4, 5, ABC. Yeah, I mean, it looks like we got a 1 and a 2, and then working on that local 3 here. So, yeah, the only thing is if it drops below this swing low here, then it invalidates it. Right there below 31.15. That's your invalidation level. So, yeah. Let me kind of catch up with you guys here. Let's see here. We got spam in here. Oh, yeah. Let's go ahead and block them over there. We gotta catch up with you. Christopher says that Canada equals real estate and oil. About it. Yeah, yeah. Oh, I just saw something recently. You said the real estate. I think I just saw, if I remember here, what was it? Something about Canada's overheated real estate market there and how it's risen so much, like 35 or 40% in the last year, something like that. And how y'all are about to start to see those prices drop off now. Yeah. Let me see here. Let me see here. What you said here? You said AMC is a bit more established as an APIS play, but when it started as a pure momentum squeeze play, if the charts could predict a 1,000% rally, couldn't you predict the next one tomorrow? Well, it's not that they predict you. It's you're playing the odds. You've got to understand what happens. So if I'm looking at this, okay, I'm going to tell you right now, if I'm looking at this right here and I see this double bottom right here, I'm in my head, I'm thinking this may potentially set up as this may be the bottom here and we're headed up. Breakout of this point up here confirms that double bottom, gives us that target. Now along here, all you want to do is just kind of count your wave structures coming on down to see what you have as you do it. And then you just kind of go from there. I mean, do you know there's going to be a squeeze? No, not usually. But you don't have to. If you see this right here as a potential double bottom, and you've got a good solid count coming off the top there, if you're longing down here, if that squeeze comes, you're great. You're golden. It's like Bitcoin here. If you looked at this and knew what was happening here and understood what was possibly happening here, as we were talking about, this accumulation right here, then you knew the breakout was coming and you were probably headed right here and potentially up here. And then depending on how that plays out, you get your, okay, is that the start of something larger? But you get in down here on this breakout and you don't have to worry about jumping in when everybody else is jumping in way up here. Yeah. Do that all the time, sure. You guys made more equity on your house in 2021 in 3 months than all of 2020. Yeah, I hear that, man. Yeah. A lot of people making crazy money with it. You know me, I'm looking for housing prices to drop off. So So I can finally buy one. This leasing, waiting for the market to kind of roll over, it's for the birds, right? Oh, man. Let me see here. Yesterday, a few names like EasyGo had volume pops and 25% moves, but not follow through. Gave it all back in 24 hours. So how do you know if it's going to be a 100% marker versus a pump and dump? Well, first of all, Christopher, you have to understand, you're not going to ever know. You will not know anything as far as price action goes, because there are no guarantees, okay? Now, the longer you're in it and the more you've seen price action move and whatever, you can have ideas as to whether it's going to or not, but you still, that shouldn't be your be all, your end all be all. Your end all be all should be, okay, well, here's my narrative. And according to that narrative, I need to break out above this level. And if I do that, then that adds a lot of confidence to whether I'm right or not. But if it breaks down below this other level, then that invalidates what I'm thinking. And that's the biggest concept that so many new traders never actually figure out. They think, oh, you have to know what's going to go on. You don't have to know what's going on at all. All you have to know is, if you think it's going to do this, then at what point in that movement, logically, is it more likely than not? And at what point in that chart does it go the other way? At what point does it say it's gone this point and it's no longer valid? That's the key to it right there. So, I mean, like you said, what, EasyGo? Let's take a look at that real quick. Oh, let's see here. How was that spelled? Oh, just EasyGo. Okay. Yeah, look at it. It came back, gave it back. All right, so again, looking at this, the first thing I'm interested in is right here, is that we're finding support around this S2 pivot on the daily. Let me zoom out here. Anything on the weekly? No. But daily, let me see, what do we got going on here? So for the daily, look at what we have. Look at right here. Look at where volume is or look at where you're getting these higher lows off here, right? And for price, and these lower lows here. So you get this point here, and you should be like, okay, we're probably going to get a bounce of some sort. Now, do you know if it's going to squeeze this high? No. But looking at this chart here, if you're breaking out above this area, you should be looking up toward this area right here at the pivot. So, I mean, minimally, you know that if you're breaking out here, most likely you're probably going to go up here. Now, if it breaks out farther above that, then you know you're going to want to look at this swing high here, which is basically the R1 pivot. So all of a sudden you've taken that now to a potential target of that pivot area to a target of the R1 there. So now we're up to about 41% potentially. Now you'll notice here where it stopped is actually just about this resistance, this right there. You got it right into that point there. Now, how do you know if it's going to go up or not? Well, again, it's going to be dependent upon, again, you're really not going to know if it's going to go up. What I'll do is I'll zoom in here a bit. If I'm looking at this, if I'm seeing this, this bullish divergence coming up here, like this. And I'll be interested in what's going on here. So here I get like this, looks like a 1, 2 potentially, 3, 4 as a diagonal. There's nothing really there that helps you figure out if that's going to be a big pump or not. There's no real way to kind of look at that. Let me see here. If we look at that, we do this here, and we do this here, well, you've got a target on there of that general area there. It's a little bit higher than, doesn't quite reach it, but you've got a general target based on this pattern here, this wedge. So I mean, you've got at least an idea of where it could be headed there, you know. But there's no way you're going to ever know if there's going to be a pump right there or not. But the key is to be in before it happens, and then to have targets to the upside. Where are you looking for it potentially to head to? This one pumped quick. This right here. Yeah, if I look at this, I go 1, 2, 3, 4, and then that's a 5 or something there, it looks like. But now you've got that big breakout there. So now the question is, you know, what goes on here? Do we get some movement up? This could have just cleared the way here. This could have just cleared out all these orders that were here, and we could see price follow up here. I mean, your weekly's nice and low there. You got good volume on that. The weekly candle, I want to see where does this end for the week. You know, how far does this push up for the week here? That's kind of what you get there. Not really exciting. That's all because you got the other ones there. You know, can we get a close on the weekly above this resistance? It's not the best descending wedge, but you can definitely see that you were coming near a bottom area. You've got large candle spreads here, and then they kind of become smaller as they get in here. And then you've got this bit where you see volume start picking up a bit. See how volume starts picking up in here? They're showing you that there's interest now. Interest. You should be paying attention. If this can break out and close above this, I think things get really interesting then. I think maybe potentially looking at a pattern target, which should take you up there toward here, which is what you should do. If you've got a proper descending or ascending wedge, your target based on the height of that wedge should take you around the top, back to where it started in that area. And now if we draw our structure here, I mean, it almost gets you up to the EQ of this supply structure here. So I want to see where does this end this week? Do we end above this? If we end above that descending resistance, I think there's a good possibility we're heading way up here around $13, $14. So yeah. Tell you right, are you waiting to buy as well? Your trading background keeps you from pulling the trigger. Trade too crowded. Yeah, things are too crazy. I'm not interested in the crowded trade for housing. Because I'll tell you what, here's the thing, guys. If the economy goes off the cliff, like I'm thinking, you know, a lot of businesses are going to go out of business. There's a lot of zombie companies right now that are being held up because people are buying into them because they believe the Fed's going to keep, going to keep supporting them basically, and the Fed won't keep doing that. And so those zombie companies go out of business. People are going to lose jobs. It's going to other businesses are going to go out of business. More people are going to lose jobs. They won't be able to pay their mortgages. Real estate's going to get auctioned off, lower prices. That brings down the overall complex in price. Value of the dollar continues going up. You get more purchasing power and lower prices. It's a double whammy. You know, until the credit is the excess credit is kind of wringed out of the economy. That's what that correction, that depression, that recession is going to do. What it's supposed to do. Especially depression. Because, you know, depression's over a longer period of time when you're looking at it. Yeah. Can we put it in hot takes? Yeah, I'll take a look at that, man. I'll take a closer look at the chart today, and we'll see if we can pop it in there. Excuse me. So anyway, guys, I mean, that's kind of it. That'll do it for today, I think. Man, oh man, got choking up here. The 24,000 square foot crib, man, I don't know what I'd do with that much room, honestly. Go back to 7,000, 8,000 square feet. We're good. Anyway, guys, thanks so much for joining in. As always, I really appreciate the comments and the questions, guys, and and whatnot there. Again, I just want to remind y'all that I don't have a magic 8-ball. Not even a play one. I don't have a crystal ball. I can't guarantee you things are going to happen how I'm looking at them. But the important thing is to understand that, okay, here's my idea, and here are the things I'm watching. I'm watching for price to do this. But if it does this other thing, again, if it invalidates the idea, then it invalidates it. But if it goes to the other, then it starts adding confidence to the idea. And that's what trading's about, guys. Don't listen to anybody out there who swears up and down they know what's going to happen. And they can guarantee you what's going to happen. They're telling you that either to get money from you or to get you to listen to them, to follow them, so they can make money as influencers or something. Just be careful out there, guys. There's too much of that stuff going on. And you're going to end up losing a lot of money listening to yahoos like that, okay? So just understand that none of us out there, no matter how long we've been doing this, Peter Brandt's been doing a lot longer than me, 40 plus years. None of us know what's going to happen for sure. When you've been doing it long enough, you learn to have strongly held beliefs, or strong beliefs that are loosely held. That's the way Peter Brandt says it. And that's really it. They're strong beliefs because your narrative and whatever you believe in that, but they're loosely held because if price does that opposite thing, if it goes through your invalidation level, then it's no longer valid. You have no interest in continuing to hold it. And as long as you can do that, it really sets up for a lot easier life as far as a trader goes. If you're doing anything else, you're gonna hit a lot more of frustration and heartbreak as a trader. You're gonna lose a lot of money that you don't have to lose. All right, guys. Y'all have a fantastic week as always. If you'd like to join us, don't forget. Scroll to the beginning of the stream again, and you'll get the discount code there for howtotradetowin.com. That will be done August 1st. We will no longer offer that, and I am at this point. We've been doing this for a while now, so I'm not sure when the next time we're going to have a discount is. But we've got a lot of stuff coming up into Q4. We're going to add options to Tier 3 as well, options education and stuff. A lot of stuff that I want to tell you, but I can't tell you at the moment. You guys are going to have to wait and see. But, as always, those of you who've been with us, we're always adding to it and doing new stuff and just trying to figure out how best we can do things for y'all. But it's all about education. At the end of the day, everything we do is centered around that. Because I don't want you to have to depend on me or anybody else for your trades. I want you to be able to do your own thing. Take trades that you're comfortable taking in time frames that you're comfortable taking them. Okay? You guys have an absolute fantastic week. If I don't see you in Discord, hopefully I'll see you Friday, 11 a.m. Central Standard Time, and we'll check back here. But remember, the only thing you control in the market is how much you lose. That's it. That's it. Risk management, most important thing you'll ever do as a trader. Day in and day out, guys. Don't forget that, okay? Have a great week. Take care.